Okay, great. So I want to quickly discuss with you a new trade alert. This alert was sent out to my subscribers yesterday, and it's been a very profitable trade so far. However, I want to communicate it to you because this is the type of alert that is constantly sent out to my subscribers, and it provides actionable advice for them if they believe that it's in their best interest to follow my trades. So on Wednesday, I identified this opportunity. And before we get started, I just want to let you guys know that I am not a registered investment advisor, and options and trading in general do carry risks. So everything that I say should not be taken as investment advice, and you have to do your own due diligence. So again, I am not a registered investment advisor. Nothing that I tell you can be taken as investment advice or should be taken as investment advice. You should evaluate everything that I say through your own lens and whether it's good for you, and do your own diligence. So anyway, the trade alert that I believe is a good opportunity, in which I made my own account, is in Raytheon, RTN. So on Tuesday, Raytheon was trading up to $187.50. And then on Wednesday, it declined in value it declined in value by around $8 or so. I think it fell below around 175 at one point. What we did in my trade alerts, even though we were not as patient as we should have been, is we sold 160 strike price put. So that's the trade that I recommended at that price. Or actually, I believe it was the strike price was higher than that. I believe that we sold a few specific expirations, and in the beginning when Raytheon was only down around $3. We sold 167.5 put, and then I believe later on, once it fell even more, we placed another trade. But in this specific situation, if you have interest in following my recommendations, then right now I would recommend making the following trade by, what I believe is a good opportunity is by trading the May 10th. You would sell the 162.5 strike put, and by doing so you can collect around 85 cents in premium. Now if you also want to take advantage of the high implied volatility that's inherent in Raytheon right now, you can go all the way out to the August monthly expiration, and you can choose a strike price that's as low as $150. Again, right now Raytheon is trading at $178.50. On Tuesday it was trading at $187.50. So as a result, it's trading around $9 below where it was just a few days ago. You can go all the way out to August. You can sell the monthly. You can choose the 150 strike put. And in exchange for selling that and taking on that risk and agreeing to buy Raytheon at $150, you will collect around $1.50 in premium, or $150 per contract. That means that if you choose the August expiration with the strike price of $150, you would agree to buy Raytheon on the worst case scenario at $148.50. Now, a lot of people are overly concerned about assignment. In the real world, your chances of getting assigned are extremely low. I probably get assigned around 2 or 3 times every single year, and when I do get assigned, it's by choice, because you can always roll and you can manage the position, and that's something that I discuss in my options trading education course at beststockstrategy.com/memberships. But to recap, I want to discuss this specific trade, which I sent out to my alerts members. And if you have interest in signing up for the alerts, it's only $19 for 7 days. You can go to beststockstrategy.com/memberships, and they frequently receive these type of alerts because they follow my trades. And this specific trade, to recap, is Raytheon, which right now is trading around $178.50. On Tuesday, it was trading at $187.50. It fell around $8 from where it closed on Tuesday, and it fell $8 on Wednesday. At one point, I believe it was trading below $175. It is rebounding slightly. On Wednesday, we got in very early, and then we sold the 167.5 strike, and then we also sold a lower price strike. And right now, on Friday, the trade that I believe would be in your best, the trade that I believe that I am interested in making is to identify and trade the May 10th 162.5 strike, and that would give you around 85 cents of premium, or $85 per contract. Or if you want to go all the way out to August, you can sell the 150 strike and collect around $1.50 in premium. If you want to turn this position into a spread, for the May 10th 162.5 put, you can sell the 162.5, you can collect around 85 cents, and then you can buy, let's say, the 155 strike. As you guys know, I'm not a proponent of selling strikes, or rather of selling spreads. I believe that naked options are much safer, but I do understand that there is a higher return on capital and a greater capital efficiency when you trade spreads. If you decide to turn that August monthly 150 strike put into a spread, you can sell the 150, you can collect around $1.50 in premium, and then you can also buy the 140 strike put, which would then reduce your maximum loss from $150 or $15,000 per contract if Raytheon, which is a $50 billion company, goes bankrupt, which is extremely unlikely and it's not an expected outcome. But if you wanted to turn it into a spread, you can sell the 150, you can buy the 140, which as a result would give you a maximum loss per contract of $10 a share or $1,000. I would estimate that the probability of profit on these trades are extremely high, probably around 95% or so. I'm just estimating that, but figuring that last year Raytheon traded up to around $230, and then in December it fell all the way down to around 140. In the worst case scenario, if Raytheon falls, I would be able to roll and manage this position, and given enough time, I could definitely turn this position profitable. Do I think that this position is even going to be challenged? I don't believe it's going to be challenged, and in my opinion, I think that this represents around an A trade. So if you have interest in receiving these type of alerts, you can go to beststockstrategy.com/memberships. There you can follow my trades and also receive my thoughts. And remember, I am not a registered investment advisor. Nothing that I say on this video should be construed as investment advice. Options trading does carry risks, so please do your own due diligence. And if you have any questions, let me know. Feel free to go to beststockstrategy.com, enter in your email address, and receive over $400 of free training that is incredibly valuable, and that's more valuable than other people's paid materials. Once again, this is David Jaffe, and I appreciate your attention.